Welcome, everyone, to our Long Options webcast. I'm Connie Hill. I'm happy to be here with you today. See some familiar names in the chat. Happy that you joined me here today. And if you're new, welcome as well. Now, I hope that you are practicing these strategies as you're learning about them. One of the things that we're going to focus on today is our entries. Now, are you one of those people that likes to be late to your party? Meaning you don't want to be there right at the very beginning. Maybe you'd look desperate. I don't know. And you like to maybe just kind of come in mid party and enjoy it from that point on. Well, with long options, that's probably not the best way to trade. We want to be there at the beginning of the party or the beginning of the move. So if you find yourself chasing that a little bit, we're going to talk about what makes good entries as far as long options or a real fast trade might be. Now, I am joined in the chat by Mr. James Boyd. As James is fond of saying, the redheads will take care of you here today, which we are happy to do. So when you have questions, chat them into us. Okay, I'm going to keep my eye on the chat. James will as well, and we'll pick up maybe some questions I can't quite get to. I do hope you're following us on X. Get a lot of nice little nuggets throughout the day. Connie Hill see us and James Boyd see us and would love a follow. Let's go through our disclosures. We've got a lot to cover here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for educational and informational purposes only. Don't consider it a recommendation. We will be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. Now, as far as our agenda goes, I do want to discuss a little bit the concept of long options, them as a strategy. Some of you are new to options. Maybe you have trading privileges and are just starting to explore the different option strategies you can trade. This is probably one of the first ones that people will come to is a long option, buying that call or buying that put. Price, time, and volatility all impact the price of an option. And so when we see that being relevant, we want to talk about it, discuss that. We're going to be looking at a lot of examples here today. We're going to look at some trades we did last week, see how they fared. And then I have several for us to discuss today as we talk about those entries. So as far as a long option goes, a long call, you buy it if you think the stock's going to go up. And so it's kind of similar in thought and what you're looking for something that's bullish, something that's upward trending, something that is hopefully moving fairly swiftly. Long options require that stock to move. And so what we're trying to do is identify where's the beginning of the move, get ourselves on board with that move and see if it follows through for us. If it doesn't, or if it dilly-dallies, that can really hurt an option trader. There's something called theta value, which is these kind of trades are theta negative, which means as the time goes on, as that life of the option goes on, it tends to decay over time and a little bit of erosion. So we're trying to avoid, or we can't even really avoid that. We're trying to minimize our exposure to that by having something that's moving really quickly that maybe we just don't even notice the time decay. Long options are also what we call vega positive, which means if implied volatility increases, it increases the price of the option, which typically we'll say is favorable, right? We want the value of this option to go up higher rather than going down lower. And the max loss of options is your debit paid. And so you need to be aware that you could lose your entire investment. Now we want to avoid that as much as possible. However, you need to know that it is a real risk. Question here from Black Card says, when is the next covered call class or recorded video? We can take a look at that real quick. In this particular class, we will only cover long calls, long puts. Okay, and a long put is just if you think the stock is going down rather than up and you want to capitalize on that move down. James might be able to put in a link for you for the next time the covered call class will be taught, but there's a couple of places you can go to find out, all right? Let's just hop over there real quick and I'll show you. One, if you go to our Trader Talks channel, would love to have you as a subscriber. You can click that button down below that's blue and it says subscribe, and then it helps you find our content. And one quick way to find covered calls or any other topic you're interested in is come over here to the search magnifier, and I'll just type in, oops, I'll spell it correctly too, covered calls. And so anything maybe with covered calls in the title is going to show up here for us. And so we can see recently Ben taught that, and we can see the full playlist of covered calls and short puts. And then we can see some other categories, other instructors that have been teaching about the covered call. So Cameron May right now is teaching that class. And so you'd see a lot of different recordings from him as he teaches and talks about that covered call strategy. So we make it easy for you to find our content if you are a subscriber to the Trader Talk. So I'm going to encourage you to do that. Now, XX per Ty says to be profitable on options, you should be profitable in swing trading. I like your point there that swing trading and technical analysis are really helpful for long options. Absolutely. All right, let's hop on over to my paper money, where let's first of all talk about a couple of trades that we're in. There was a question that somebody had about volatility indexes and maybe which ones to look for. Probably the most common volatility indexes, the VIX here. It is based on the volatility, the S&P 500, which is a good general gauge for the overall stock market. So a lot of people will use the VIX for that purpose. Right now it's in lower ranges. All right, right now it's at 15.67, and you can see that's kind of near some of the lower ranges where it's been in the last 6 months. It can go lower than that, but just generally speaking, just know, okay, it's in a lower range. That means one, maybe not as much skittishness in the marketplace. Maybe call buying is more apparent than put buying. We have a lot of put buying, that volatility index goes up. Now, our markets today, again, have been interesting. Initially, before the market even opened, the NASDAQ was down, the Dow was kind of flat, S&P was down. But what are we seeing now? Oh, maybe a little bit of climbing back up as far as the SPX goes. Looks like it's currently profitable. And you can see it did come down here to our 10 and 30 period moving averages before taking a bounce off of that. As far as the NASDAQ goes, because we look at a lot of NASDAQ stocks as well, it looks like it's still down 1.2%, even though, you know, it was lower here. And man, it's just clawing its way back. I would say it's not yet a hammer candle, but it's looking hammerish in that it's got this long shadow from today and a little small body, kind of like your little hammer. And typically that's an indication of a reversal. Some people like to see confirmation with it. Some people like to just see that hammer and maybe get on board with it. All right. Let's talk about a couple of trades we did last week and how they fared. Last week, we focused on putting in two targets, a target maybe that was a little aggressive, a target that was smaller. So we had two targets and we had a stop loss in there. Because in these kind of trades, if it doesn't move quickly the direction you're thinking it's going to go, it can struggle. And so we want to be out right away. If there's any indication of weakness, we want to just nip it in the bud, get out quickly, not take a big loss on it. Now, last week, one of our first trades here was LRCX. We'll start with it. Lam Research, we had a pretty decent entry here. We had a breakout above resistance. I put a green oval on the day that we got into the trade. So we had a nice breakout. We would consider it. Turned out it was a little bit higher than average volume, which typically is an indication that it's going to stay. However, it didn't. The very next day, what did it do? It broke down below that resistance, which should have acted as support at that point. Pulled back here, immediately hit our stop loss. We were out of the trade. And as we look what's happened since that time, we're thinking, yeah, good thing we were out of that trade because it was quickly going the opposite direction than where we thought it was going to go. All right, so it hit us out on that trade pretty quickly here. Next one up was SpaceX. SpaceX hasn't been trading for all that long. It's one of the newest IPOs that people have been, there's been a lot of buzz about SpaceX. In any case, we did have a 10-period moving average, and it looked like maybe it had found some support down here around that 148. Looked like it was bouncing off that 10-day moving average and heading up. So same thing there. We got in on a real clean on the time entry. However, it reversed directions. We've got this big bearish engulfing candle, totally wiped out the growth of the day of the candle when we got in. And again, it hit our stop loss, hit us out pretty quickly on the trade. And sometimes that's the way the market works. Sometimes it makes swift moves on you and doesn't go the direction you think it's going, even though maybe you do have an ideal setup and an ideal entry. And that's what happened actually with all of our trades last week. The last one was Pepsi. Now, PepsiCo, let's kind of maybe zoom in about here. It had a nice break of support, and it did it on some extra volume, and it looked like, okay, yeah, this thing's been downward trending, and it's downward trending even more, breaking that support. And again, the market flipped that day. Things that had been going bullish went bearish. Things that were going bearish went bullish. And here again, we got stopped out. And again, I don't mind that in the sense that we wanted to get out quickly. What if we had not put on a stop and it was still continuing to go up? Man, we'd be in a world of hurt and maybe taking closer to, a majority loss on the trade, and instead of trying to nip it in the bud. Okay. So yeah, Sam says you did the LRCX trade. You got stopped out as well. Yeah, that can happen. Just seeing if there's anything else there. X Expertise says, how do you set up a stop loss on options? I'm going to show you today because we're going to be doing some new entries. Okay, let's move on to some things that are say bullish today. Now let's first talk about what would you consider a good bullish entry. Feel free to chat that in if you want. Right, what you like to see as a bullish entry. And I'm going to just copy over something that you might be familiar with. Okay, so as far as a bullish entry, if you get a bounce off support, that can be a nice entry, can't it? Where the stock pulls back and it just gives a nice little move up. If we're looking bullishly, we'd want that stock to be bullish. So maybe let's go back to, for example, we're going to pull up T-Mobile here. Now, T-Mobile actually has not been bullish for that long. But what did it do today? Because this can be another type of entry that you look for. Well, it had been getting lower highs and lower lows, so it was downward trending. And it was forming what we call this descending triangle, which is a bearish continuation pattern, meaning looks like the stock's going to continue to do it. In fact, last week, it too broke through its support. It could have been a great bearish entry. We didn't use it, but quickly it reversed, and now it's broken through this diagonal resistance. All right. Now, it is a little early in the move. You'll see the 10-period moving average is barely starting to show some reversal and starting to head up. So it's very new in the trade, but some traders that have been waiting for some reversals like to see that break of diagonal resistance. Okay, some of the things you like to see high volume. You look to see that the 30-day is in upward momentum, which right now it isn't quite yet. That 30-day is still, I would say it's starting to flatten out, but you're right, it's not going up yet. Some people might like to see that. Kevin says, hey, I like to see a confirmed hammer as support, meaning he looks for maybe the next day of trading after seeing the hammer to verify and confirm that it really looks like it might be reversing. Yeah, Trader Joe likes diagonal breakouts. Yeah, so this can be something that we might want to look for. So that bounce off support level, or it could be a moving average. And then we aren't seeing a hold yet here, but basically a hold is a close above the high of the low day. And really, how do you determine that? You might determine that by seeing a stock that's been upward trending and you see it rally. Trying to make it draw a little picture here for you. My drawing, there it goes. There's my drawing tool. Hopefully this will work now. You see the stock running up. It has a little pullback and then it gives what we call a bounce. But how do we know if it's a good enough bounce? As we look for the closing price to be higher than the high point on whatever this low candle day was. So if this high point here were at 20, we'd want to see it either move above 20 or close above 20. Some people might wait till the close of the day to make sure it really closes there. And there might be others that say, I'm going to take a trade above that price, or I'm going to take if the stock moves above that price. Okay, that is what we call a hold. All right, so T-Mobile. We're going to take this entry. Man, is it happening right now? Yeah, today is the first day that it's broken above that resistance. It was up a little bit higher. It's pulled back a little. That's not uncommon, but the move is still there. Now let's do a long call on this one, right? Again, new in a bullish trend. So some people might consider this aggressive, and it might not meet your rules if you want to see that 30-day headed up, like somebody typed in here. T-Mobile has some decent trading on it. Over 2 million shares traded so far today. Day's still fairly young. And it also has weekly options, which gives us some variety of what we want to choose. In a long option, we want to make sure that we give enough time for the stock to make a move and have extra time. How much extra time? Some people like to see 28 days or 30 days, or basically a month's worth of time, so that we don't run into theta decay as readily. We're still going to have theta decay because it's there on every option. However, hopefully we won't feel it as much if we've got a little bit of time to let the stock make the move, even though we want it to do the move quickly. Now, where could it go to? Let's talk about possible targets. Well, maybe the previous high before this is kind of similar to where it is right now. Okay, well, that's not going to be that interesting of a target, is it? However, kind of the next major move here is up here about 199 and change. Okay, almost that 200 mark, where we can see it was resistance here a couple of times. And so it might act as resistance for the stock here as well. So we're going to put in, I'm going to say it's a fairly aggressive target up there at 199. And let's go a little bit below that. Okay, maybe you like to go, say, 10 cents lower, 20 cents lower, something like that. We're going to go 199. I was thinking 199.50. Okay, so maybe 13 cents away from that, not looking for the absolute highest. Okay, that's where we're going to put our target. So I'm just going to write here in our margin here, we're going to go 199.50. Where would a stop loss go? Well, in this case, when we see a breakout, whatever is acting as that resistance, if the stock then goes and closes below it, then it's a false breakout. All right, we call it a fake out. In this case, let's say we come over here to tomorrow and we come down to where maybe the bottom, where that triangle might be, that support. Maybe we go a little bit lower than it, because if it might just kind of dip in here and come back. So we don't want to call it too tight. But what if it came, say, for example, to say in the range of about 183.86. 183.86, it's just a little bit below that. Because if it goes there, it's not breaking out anymore. We want a quick exit if that's what it does. Kind of like what happened to us last week when the market really had a swing. So let's configure this trade. We're going to be doing a long option. Stock right now is at 188. So our at the money option would be the 190. It doesn't have any intrinsic value yet, and that's okay. Our 185 strike has a little bit of intrinsic value, so it might be considered a little bit more conservative. Going deeper in the money is even more conservative. So if we were to go here to say the 180 strike price, yeah, it has quite a bit of intrinsic value. Now, there is no right or no wrong as to which of those, say, of those three you chose. Or if somebody wanted to go way out of the money and buy maybe even a little bit more time, maybe they're looking for a really big move and they want to give the stock time to do that. In our case today, we're going to do the one that's the slightly either at the money or slightly in the money and err on the more conservative side of things. Okay, so in this case, the at the money would be the 190. We're going to be a little bit more conservative. We're going to go for the 185. And here I'm going to say buy custom with OCO bracket. OCO bracket means we're going to have two orders. And whichever order gets executed first, that's where we get out of the trade, and it'll go and cancel the other one right away. So we're going to configure this for our target and for our stop loss. Okay, so expertise who wanted to see how do you enter in a stop loss here, this is how you're going to do it. Question here says, there is earnings on July 23rd. Will this impact the trade? It could if it goes that long. Our intent is to be out of the trade before then. That gives us a good couple of weeks. And if it hasn't made it at least halfway to our target, or if it's starting to, maybe go sideways, first sign of weakness, we're going to be getting out. We actually don't plan to be in the trade over earnings. Okay. Let's see here. This first one here is intended to be our target. How do we know that? Because the price comes in $1 higher than what the current price is, and this one comes in $1 lower. So we're just going to use it that way. Now, our initial price here, we said, let's do it based on the price of the stock, okay? Versus the price of the option. If we wanted to use the price of the option, we could do it here. But because we're going to use the price of the stock, and actually I might set this up a little bit different. Instead of doing an OCO, I'm going to do a first triggers. And let's just get rid of that second order, and we're going to embed it all in this order here. We're going to say it's going to be based on a market order, so we don't know exactly what that price would be. We would make this good till canceled and click on the gear to put in the price conditions. So we're going to say if the price of TMAS gets greater than or equal to, we're going to put in our target number here, 199.50. Then we want to get out of the trade. Let's see if that goes in there nicely, 199.50. I'm not sure what it's not liking. I'm going to type it in fresh. Again, there it goes in 199.50. Or if T-Mobile marks at or below our stop loss price, 183.66, we want to be out of the trade. Now let's just make sure our arrows are going the right direction. Okay, so greater than or equal to 199.50 is right. Or if it goes down to 183.66 or lower, then we do want it to get us out of the trade there. All right, we're going to hit save here. I'm just going to see if the price has changed all that much from 12 bucks. Looks like it hasn't. Let's go ahead. We're going to send that in. We're going to put it in our long vertical or our long options bucket or our little grouping for our long option trades. Great. We just got filled at $12. All right. Kevin says, oh, you may be talking to Ricebird on this. All right. I will stay out of the conversation with Ricebird. Okay. Let's carry on. Okay, that's a bullish one, right? Do we have, I've got like several bullish ones and several bearish ones, okay? Because I do want to look at the bearish ones here today as well. But let's look at this other bullish one. Palantir. It's kind of a similar situation where if we back up, we can see it was downward trending for a little bit of time, although it had been upward trending for the first, say the previous year, had been more upward trending. It just kind of got in this pattern, a little bit of a sideways pattern here, and then it broke down below that support level that was strong, went down there to that 106 range. Well, again, it was in a descending triangle, a bearish continuation pattern, And what is it doing today? It's breaking out. It's breaking beyond that diagonal resistance. So it's kind of a similar setup move like what we were seeing on T-Mobile. Now, the 10 has been moving up for a little bit longer. The 30 is, what would we say? Maybe it's flattening out, but it hasn't been bullish a ton of days to make that 30-day moving average shift just yet. So I'm going to say it's a little aggressive in the sense that we're looking for it to be early in the trend changing. However, with today's entry, having the breakout be today, that's ideal. We're happy to get in on that breakout day. Now, some of you are going to be concerned about volume, and I do want to mention that here. On diagonal breakouts, you don't need to see above average volume. Horizontal breakouts, we love to see extra volume. The diagonal ones, not quite as important, although I do like the looks of what the volume is doing here today, and it wouldn't surprise me if it closed with above average volume, right? Getting above that little purple line there. So, so if you wanted to do, somebody wants to know, what if we had done that as an OCO order? We'll go ahead, we'll do the next one as the OCO. There's different ways that you can do it. The way I showed you the first time actually is a little bit more, I don't know, streamlined as far as putting your data in. But we can do this one as a real OCO order, not a problem. All right, let's see here. Expert says, on that stop loss, is it applicable only during market hours? Because of the way that I set it up, yes. However, you can mark your orders to be good in extended hours trading if you want to. Many people don't like to do that, although there may be specific purposes that you might. Sometimes after hours, the bid and ask prices get spread out. All right. Before the market opens up in the morning, kind of that bid ask spread that had been a little bit wide cinches up, okay, gets a little bit tighter. And so sometimes you might get knocked out of a trade that you place in extended hours because maybe it goes down a little artificially low. Maybe the price does, and you get taken out of your trade. Next day, when the prices cinch back up, you're like, oh, I was in good shape. Why did I even do that? Okay, so you want to be careful with it, be mindful if that's really what you want to do. All right, Palantir. Let's change here. Let's put in our target for Palantir, which, let's examine this. Yes, we have this one clear up a little high. Would we see something a little sooner than that? That is definitely the range that it was trading in. We could say, maybe this peak point here about 148. If somebody wanted to maybe have a conservative target, not a real long target. This one, it's interesting because it corresponds with the top of this candle here, and it catches the low points back here in first of the year. But there's really only about 3 touches in that range, so it's not like a real strong resistance. So we're going to keep this a little bit more aggressive target on it. If you wanted a shorter target, you certainly could do that. Let's keep this more aggressive target. So let's put our target here a little bit less than 162.12. Let's go 161. Let's go 161.92. So about 20 cents lower than that. Okay, that would be our target. And let's see, we don't need the 0 in there. Okay, how about our stop loss? We're going to put our stop, same thing. If it breaks down below that diagonal, what should act as support now, if it drops down below there, yeah, we want to be out. Now let's see what today's low is. Today's low on the candle is 131.46. So let's put it at 131.26. All right, and then we're going to watch this. And if it gets to a point that we're like, hey, this stock has maybe had a couple of days of good movement, we want to lock in some profits. Yeah, we would consider moving it up, moving our stop loss up and cinching it up as say if the stock continues to go up like we would like it to. Okay, we don't want to cinch it up prematurely too much, or we will get stopped out on the trade because option prices really vacillate quite a bit. Stock could move like 1%, maybe the option price moves 20%. Okay, so we do want to be really careful there. But we're going to be, same thing with T-Mobile, we're going to be looking at it every day. In this case, let's go ahead, let's put this order in. We'll do it as a true OCO. Palantir, again, has some weeklies. These guys have great trading volume, but I like having at least 45 days worth of time on this because we want the stock to have some time to move. Maybe it takes a couple of weeks together. You know, we hope it gets there really quickly, but maybe it takes a couple of weeks and still we still want that kind of 4-week buffer to go along with it. All right. Stock's at 137.67. So 135, a little bit in the money, is maybe slightly closer. And then maybe a little more aggressive, 140, 145. If you wanted to say, I want to play a real big move here. Okay, you could be more aggressive if you wanted to. Again, we'll do the one that's just in the money, a little bit more conservative. This 135 is going to cost us about $13.55. We're not going to dwell on this today, but I do like the tight spread we're seeing here. The distance between the bid and the ask is only right now in the neighborhood of about 20 cents, which is great. Love seeing lots of open interest here. So we have good company, all right? Meaning we're just not the only ones trading this. Lots of other contracts are being traded as well. All right, on this one, we will do the true OCO. So we'll choose OCO bracket. And again, this first one is for your target. Now, again, you could put the target of the option if you wanted to. I'm going to make this one be based on the price of the stock again. So I am going to change this to a market order. I'm going to make it good till canceled, and then we're going to put in the price of the stock here. So we get our, let's bring this up a little bit. So we're going to look for the price of the stock to get at or equal to, and this, we want it to be greater than or equal to, so let me change that sign. And we're going to do 161.92. Now, I'm not opposed to changing the target. For example, say we get sort of close to 161.92. What if we're, say, at 161.50? We might go, good enough. Out we go. Go in, change the order. You don't have to hang on for whatever that initial target was that you put in. You can be a little bit flexible with that, but it's good to have an idea of where you'd like the stock to go at the beginning of the trade. So that is our target. Again, we need to put in a stop loss. And again, we're gonna do a stop, but we're gonna make it a market order instead. We're gonna have it be based on the price of the option or the stock, but it's gonna act as our stop loss order. Okay, we're going to make it good till canceled. Again, if you wanted it to be based on the price of the option, say, for example, you said, I want it to be based on, 50% of the price that we pay for it. Because about that time, people are like, it's just not going my way. Let's get out. Okay. And so if you wanted to place that based on the price of the option, you certainly could. And then you'd put that stop back in. All right. But since we're going to do it on the price of the stock here rather than the option price, we're going to do it this way. We're going to say symbol, and we want it to say less than, or if it gets less than or equal to 131.26, we want to be out of there. Okay, let's make sure our arrows are going the right way. Let's move that up a little bit. And so this says, all right, we're going to make sure that it's less than or equal to 131.26, and it's going to show as a wait condition until that happens. And then whichever happens first on this as well, that's the one, it'll get us out of the order and go cancel the other one. And that's how the first order would work as well. We just kind of streamlined it by putting it in together, just in one line item. All right. Sam says, we could do a synthetic on Palantir. We could, but this is not a class on synthetics. But if you felt that was a more appropriate trade for you, you bet, buy that long call and sell the short put, right? You could definitely do that. We're going to put this in our long options grouping as well here. Now I'm noticing out in the chat that we've got a survey. And those of you that have seen these surveys before, we do them from time to time, will want to kind of gauge how you think the session's going here today. And it's really easy. And I can be on board with easy surveys. It's 2 questions. And you just fill in the radio button 1 to 10 on a scale of 1 to 10, 1 low, 10 high. Just what your feelings are. Go ahead, plop, and you can be done. If you want to communicate something to me or answer the couple of questions, you can do that. You don't have to exactly answer the question if you don't want. If you want to communicate something to me, that's a great way to be able to do it. If you're, say, struggling with a concept or the types of stocks you're using or whatever the concern might be, go ahead, let me know. I like to incorporate strategies to what your questions are in our upcoming webcasts. All right, just go ahead, click on that little survey, let it sit in the background until you're ready to go or our session ends. Can you help alleviate my nerves a little bit about placing market orders? You know, market orders mean what? They mean fill at the next available price. Because we're basing it on the price of the stock and we don't know if it's going to get there, or if it does, when it's going to get there. So it makes it hard to know what the price might be. Okay. But generally speaking, at the end of, or at the beginning of the market day, yeah, those market orders fluctuate, or I should say the price of options fluctuates a lot. And sometimes with market stops, you don't get the best fill. However, if the market's engaged and it goes to your, you know, where you put the stop on there, then typically you get a decent rate, but it's just not guaranteed at any particular price. However, if you want to control the price going in, like we do typically with limit orders, that's something that I can be a fan of, because you're saying, hey, I'm willing to pay this much, but no more. Okay. And so if you're a little cautious about market orders, I understand that, because you don't have a guaranteed price. However, do some paper trading to build your confidence with it and see how you get filled on those. Okay. The question here says, we have targets based on prices. There a way to estimate what the max loss and the max profit might be based on conditions? You can, but it's not going to be the purpose of our class today, although it's something we could cover in another class. That is using the Theo price calculator here, where you can plug in when, you know, how soon do you think it might get to the target? Is implied volatility going to change? You can go in and put in those parameters. If you have the Theo price selected as one of your columns, then it creates this area here, which is the little calculator, and that's where you can put it in. By this date, how big of a change in the price, how big of a change in implied volatility, and you could calculate that, and then you could try putting in your options based on those prices, although again, they're just going on the best assumptions that we have and the best guesses, even though we don't know what the stock's going to do. Great question. We'll do that in another session. We are going to do a bearish example here, Trader Joe. All right. Question here is, how do you modify the amounts once the order is placed? Like if we're watching it, we want to update something. Let's just go to our working orders here for a moment. And oops, wrong thing. Let's go to activity and positions. And then that top grouping is our working orders. Okay. Say on Palantir, say we were in a position where we did want to adjust that stop. Okay, it should be on this second order here. I'm going to click on the gear. And our stop, oh, that one's actually our target. This top one's going to be the loss. Do a right mouse click anywhere in this order, change cancel, replace. All right, and then click on the gear, and then you would go in and change that price. Okay, so say you wanted to move the stop loss up to 136. You just come in here, you type in 136, hit save, and it'll go cancel the order for the 131.26 and make the new price, the new order, take its place. It's still in that OCO combo, but we didn't adjust the target piece. We only adjusted the stop piece. But you can do the same thing if you want to change the target. All right, great questions, you guys. Appreciate those. Now, my time is up, but you guys have been great. I love the questions you asked. You're engaged. And the best way to learn strategies is just practice them in your paper money account. You could pick all of these 3 example trades to practice in your paper money account if you wanted to, because you'll likely have some questions over the next week. And next week, when we come to class, if you are paper trading that particular one, then it's nice to be able to ask the questions about it, right? Because you've been following along with the trade. But I'm going to encourage you over the next week to do 5, seems like a lot, maybe 5 long options, whether they be bullish or bearish or a combination of such. Okay. Now, I do encourage you to fill out that survey as you head on out the door. We always appreciate the time and effort you put into that. Those comments go directly to me and to our managers who like to see that information as well. Thank you for being a great audience. James Boyd, thank you for helping out in the chat, our fellow redhead. And follow us on X, James Boyd CS, Connie Hill CS. Make sure you're a subscriber to our channel. If this was helpful to you today, go ahead and hit the like button on the way out. That'll let others know you found the topic useful, help them find this class. In any case, right at the top of the hour is going to be our next class. Take a little break and then come back to Getting Started with Technical Analysis with Barb Armstrong. We'll see you there. Bye-bye.